Joseph is a policymaker. He's been tasked with updating his central bank's consumer protection rules. He knows the current rules often fall short, so he wants to make the financial sector more friendly for consumers throughout the country. Like Alice, a tailor who runs her own small shop. Alice wants to expand her business, so she needs to take out a loan. But she's never had a bank account before, and the financial sector can be a maze of confusion, especially for first-time borrowers. Alice's life is full enough as it is. She wants to equip herself to make the best decision possible for her business and do the responsible thing for her family. But in her journey to take out her first loan, she encounters many things that steer her off course. She needs clear, simple information to compare the costs of different loans. But it's not always that easy. Alice's friend loves her bank and encourages Alice to use it. Her friend means well, but only Alice can decide what's best for her. When Alice compares loan offers, she is tempted to borrow more money in the short term, even if that means a bigger burden in the future. And because Alice is new to all this, the terms and percentages are just plain confusing. One loan has a low interest rate to start, but it comes with hidden fees, an escalation clause, and a longer term. Another has a higher interest rate, but it would be less costly overall. Incomplete information, misleading opinions, and overly complicated loan terms. None of this helps Alice. She needs to choose the lowest cost option in the long run. Anything that distracts her from that is called a behavioral bottleneck. These bottlenecks can bias her decision-making. Behavioral bottlenecks are everywhere. They can trap Alice, leading her off course. This is Joseph's task. How can he eliminate these behavioral bottlenecks so Alice can choose the loan offer that's best for her? Joseph heard about other policymakers who were using a new set of tools called behavioral research. Behavioral research is the practice of finding out how people make decisions. It helps policymakers understand why consumers like Alice make the decisions they do. So Joseph went into the field, talked to Alice and many people just like her to learn what information she needed to choose the best loan for her. He found out which behavioral bottlenecks Alice was dealing with and where the existing rules for financial services were keeping her from getting to the facts and picking the lowest cost loan available. He wrote new rules requiring banks to clearly display total loan costs, and Alice was able to pick the best loan for her and her business. Joseph now has a better understanding of how consumers make choices. His country's financial sector is a better place for consumers, and Alice is chasing her dreams. Getting started is easier than you may think. It is as simple as stepping out of your office and learning from consumers like Alice.